Hi, I'm Justin Reid. I'm the CEO of Troilus Gold. We are a $150 million developer focused at the Troilus asset in Quebec. Balance sheet strong, over $55 million, drilling about 12,000 meters a month, developing the large, long life open pit Troilus mine, currently with the resource of 8.1 million ounces as of last year, over 150,000 meters of drilling since then, new resource coming out shortly, and pre-feasibility shortly thereafter.
Well, hey, good to see you again, Justin. So you're back here, mid-July. I hear you've been sort of up in camp and introducing a few new people to the area as well. So how have things been going over
there? Busy. Canada's open. The level of health is high. People are able to move and across the border as well. So we are seeing the movement of investors for the first time in 2 years. So our site has been a pretty busy spot, showing our large stakeholders what Troilus is all about, what we've delivered over the last couple of years.
Okay, well, look, the reason I called was because noticed some press releases come out. The headlines are very different from these sorts of headlines you put out before. You are now drilling and finding higher grade ore. I thought that was interesting. I mean, what do you now know from this drilling?
We've made really two major technical developments this year, which we believe add immediate value to the deposit. At the J zone, which is our northernmost ore body, we've discovered and delineated to date, still going, 850 meters, something we call it the hanging wall, the J zone hanging wall. And this extends from the edge of the ore body, essentially parallel with the entire resource. Previously modeled as waste, now delivering things like 12 to 15 meters of 4.5 grams within these larger envelopes of 30 to 40 meters of 2. J is a circa 1 gram ore body, always has been, probably always will be. But this new shallow zone that runs a fairly significant strike length is replacing waste with high grade ore. So what does that mean? Strip ratio goes way down, economics go up. Overall grade of the ore body most likely goes up, and we'll be happy to show that to you in the new resource shortly. As well, when you move into an open grade or open pit mine plan, you can focus your sequencing on a higher material early, which also allows you to repay capital faster, impacting your NAV. So that's our one major development. Great. We've had 2 press releases on that in the last month and a half. Drilling continues. And then in the southwest, which was our discovery we've talked about a few times, 3 kilometers to the southwest of the main deposit, our very southernmost hole returned 15 meters of 3.5 grams from surface. And there was 7 meters of 6. These are some of the highest grades we've seen in the entire camp. We are now drilling with 2 drills, 400 meters farther to the south. All this is great. What it means is we haven't stopped our drilling, 12,000 meters a month, and all this is going to impact our resource statement. So one question I do get, and you're probably going to throw it at me, is when do you cut off the drilling for the new reason? Haven't done it yet. Why would we? It's still going. So lots more to come. And what it means to us as a company and into the economics of our feasibility coming, this deposit's getting a lot bigger. The grade is getting more robust, and all of this is going to drive, which is already a very low capital, high return project in a great jurisdiction, a far better deposit than it already is. So we're really, really excited about this because it adds value.
I mean, in the past, it's been, okay, we get the low cost kind of component, but it's also been a very low grade thing. I mean, this dramatic, what seems to dramatically change the thinking, and you're indicating that you're perhaps not as close to decision-making about the resource, given this new data. I mean, how long do you keep this going for? You've raised a lot of money, but at some point it gets a little bit interesting in terms of the decisions you've got to make. Do you go out and raise more capital? And in this environment, that's a tough ask. Or do you put the stake in the sand at a point and go, this is where we are today. There'll be more coming down the line at some point. I mean, what's the internal debates?
You've nailed them. One, we don't need money, right? I mean, that's the thing. I don't know if it was luck or or intelligence, but the last deal that we did has really laid us out for 18 to 24 months of runway. And that means continued drilling. We were never going to stop drilling, even as we go through the feasibility. I think how it could impact us is, why would we put out a mine plan on a resource that's getting higher grade and bigger? And so from our standpoint, and I'm not talking about 6 months of delays or even 3 months of delays. I'm talking, if it takes another 6 weeks or 7 or 8 weeks, couple months to significantly add value, we're going to do it. And why wouldn't we? I mean, the difference in a pre-feasibility between December and February of next year, you don't want us to put it out at Christmas anyway. So this deposit gets better. And as long as we keep seeing these results, which add a creative value, we're going to keep doing it. When we think, if we were putting out 20 meters of 1 gram, well, we have that all day long. And we've always talked about it, right? And Troilus is a low grade bulk tonnage ore body. What this is giving us is optionality. Do I think it's going to change the mine plan? No, I just think it's going to make it look a lot better.
Okay, because last time we talked about this not being a sexy project. It was about being systematic, process-driven, low-cost bulk play, easy to understand. This is in danger of stripping that title of not sexy away from you, isn't it?
It's a little sexier. It's a little sexier because these
sexy
are
with a
great.
dad bod, maybe. That's what it is.
Yeah, exactly. It's Troilus is still going to be the circa 1 gram bulk tonnage ore body. It is what this and so I'm not going to say this is a 2 gram ore body. It's not going to happen. But what this does gives us a huge amount of optionality to make the economics and scale better. It's already good, but make it better. And I think from a sexiness, that's really sexy, because what does it mean to me? It means more money. This is going to make more money, and the NAV is going to be higher, and this is going to be a more significant ore body. And that's what our large institutions, Investment Quebec, the Case, the groups that are going to finance this ore body, this deposit, and back our team, which they already are, that's what they want to see. We want it to be bulletproof. This makes it bulletproof.
I mean, talking about that, I always think Quebec companies have a slight unfair advantage compared to other provinces in Canada in the way that the government supports the provincial government supports mining and its endeavors. But are you under any pressure from them in terms of timing? Because you gave us a clue there about how you think about these things. No one should be releasing money, in tax loss season or over Christmas when it's quiet. You've got to time these things well, or they get forgotten about or ignored. So, but you're under no pressure there from.
No, we have no pressure, and I would say that if you went to our 5 largest shareholders, which includes large Canadian, U.S. funds, European funds, they would rather see us keep drilling. Tell you the truth, it's no rush. I'm not going to say the gold market is forgotten right now. It's not forgotten by any means. I mean, gold is almost $1,800. It's great. Companies are real. Balance sheets are spectacular for the developer, for the producers. But let's deliver the best project, right? And so, we're on track. We're on track to deliver everything we said within the time frame of everything that we said, and it's just getting a little bit better. And I'm going to drill 50 meters away from 12 meters of 4.4 grams. And if that hits, I'm going to keep drilling next to that. And I don't think anybody would think that's a bad idea. So we're really excited. 4 drills going still, 10 to 12,000 meters a month. And the drilling that we are doing now is focused on the Southwest, farther south than anybody's seen. And the extension of this hanging wall, extending farther than anybody's seen. And then we have one drill, testing some interesting targets regionally as well, which is exciting.
Well, one of the things that attracted me, one of the bits of the conversation that attracted me to this story was when we talked way back when, was about the stability of the way you go about doing what you're doing. And I say that in the context of last year's kind of very frothy, sentiment-driven marketplace when anything got financed. If it was a gold company, sure, here's my money. That's what happened. We're now sort of seeing, after sort of 12 months of, of precious metals being under a little bit of pressure and sort of, slow decline in price, this attraction towards fundamentals, companies with good, strong fundamentals, right? And that, because that is the way to answer the one question that shareholders and investors generally should be asking themselves is this a growth story? Will my shares go up in value? I mean, do you think you've got a growth story here, or are we expecting to move sideways for some time until you get to some catalyst moment?
I think we're the definition of a growth story, tell you the truth. And it's just, we're financed and we're supported in the best jurisdiction, and we're going to deliver a top 4 to 5 gold mine in Canada. That we're going to come at it at 35,000 tons a day, 250,000 ounces of gold a year. That moves the needle, absolutely moves the needle. But stage 2, you move to 50,000 tons a day. And what does that look like? Well, that's Malartic, right? That's the second largest gold mine in Canada, behind Detour at 65,000 tons. It's a function of drilling and size and scale, and we're going to keep adding to that resource. We added 6.5 million ounces of gold in 2 years. We haven't put out a resource in a year. We've drilled that again. This Troilus is a very special asset that hasn't had a huge amount of penetration. And then, to your point about growth, we've had 2 unbelievable examples in the Canadian market in the last decade and a half, right? Detour at a pre-feasibility, at a PA level like we are, was a lower market cap than us, right? Kirkland Lake bought them for $14 billion. Osisko, the original Osisko, at Malartic, at their PA level, was the exact same as us. We know what Yamana and Agnico paid for them. So for us, it's about de-risking. I look at some great assets like Blackwater and Artemis, right? I think it's great. I think the team's great. I think the company's great. They're a $650 to $700 million market cap. We're the same ore body. I think we're bigger. But PFS is done, permitted, funded to build, right? It's all about these low-grade, unsexy deposits like we've talked about in the past, all about de-risking. Man, we're early, right? New resource, pre-feasibility, we're backed. Feasibility is going to be out by the middle of next year. That de-risking is going to happen really, really quickly. And that is, each de-risking is adding value to this and money to our shareholders, right? And we've just gone through 6 months of it being very difficult for the growth companies to get capital. Well, we have our capital. So as the window opens, and I think it will reopen early next year probably, you're going to have 100 companies running to the window saying, can I have some money? And that's fine. That's their business model. We expect it. We all need to do it. We don't have to. So the risk of dilution to our shareholders is really, really low, which means dollar per share goes up.